So some of the reports that are really important to review and identify as an auditor is the accounts receivable aging summary. So the accounts receivable aging report will show in increments, usually what's currently out there, and then usually in increments of 30 of what's outstanding. So you see as we look at our AR aging that our Euro Toys does have that negative 70 balance that goes for the return product that we had. It's not uncommon to see a few negatives on your AR aging report for such a situation. You kind of want to keep an eye on those in case there's problems, or maybe that money needs to be returned to the client if it's a long-term one or an older one. You'll see we also use this to identify old receivables and determining our allowance for doubtful accounts. We've got under Alcatraz Toys over $131,000 that's over 90 days overdue. So that could be something we might have to consider for allowance for doubtful accounts, just like Toys has a $274,000 balance that's over 90 days old. So these are things that we'll evaluate as an auditor to determine if our allowance for doubtful accounts makes sense. Some other reports that we might want to generate as we review and do our sampling is the sales by customer detail. This should show all the invoices and credits and everything that goes on with our customers that we could use as a sample. And you'll see it's got both our invoice and our credit memo to Euro Toys on that. Another area within QuickBooks and usually other systems are unbilled costs, costs that have been accumulated but haven't been charged out to customers. It's kind of one of those hidden reports that as an auditor you like to check to make sure that someone's not just generating costs and for their own benefit and not ultimately receiving some sort of invoice benefit for the company to charge out, so they could be hiding things in that particular area. A couple more reports that are important for us is the audit trail. Like QuickBooks has an audit trail, other systems have their own version of that, but log files and things. But we've got this audit trail that really shows us changes that have occurred. In fact, remember that sales order that we put in originally for the 50, and then we changed it to 1,000, and then we changed it back to the 50 units that Euro Toys had asked for. And you'll see that this audit trail shows the prior transactions in the fourth column under state, and will ultimately show what the latest transaction is. So the latest transaction is the correct amount, but it'll show each of those changes we made from the original to the increased units back down to the correct amount on that audit trail. So it's a good way to see where people might have been changing vendor names. Maybe they wrote a check to themselves and then they went in and changed it to make it less suspicious by naming it Time Warner or whatever, Time Warner Cable. So that's something that you can use in that audit trail as a great tool for checking on these types of transactions. Now, one of the other things that will generate out of the system are statement reports. Statement reports should tie out to your aging summary, but you want to make sure that these statement reports have been sent out to vendors, especially those that are delinquent, to remind them of the balances they owe, and it shows the detail of those transactions related to the amount that they owe. A couple other areas that I discussed before that are important for the auditor to review is sales discounts and allowances and even coupon rebates. These are all similar to pricing errors for credit memos. The sales discounts and allowances should have some sort of authorized communication or contract specifying the terms of these discounts and allowances. Now, for coupon rebates, they could either be collected at the point of sale, like in a supermarket where you've got that coupon you cut out of your Sunday newspaper, you take it in and you get that discount at the cash register. Those are collected by the individual and put into their cash register drawer so that when they reconcile at the end of the night between the cash and the coupons, it should add up to what they reported as sales. Could also be something like if you go to a liquor store and they've got those little coupons that you can mail in. So you'll buy your alcohol, you'll take your receipt, you'll put the coupon, fill it all out, send it on in. So it's usually submitted or mailed by the customer, usually to some processing center for issuance of a rebate check. That's a whole different process because you'll ultimately reimburse the rebating check company for those particular rebates that will be ultimately a reduction in your sales. Now, you could have marketing incentive rebates, as I told you before, where there should be contracts out there that tell clients, if you hit your quarterly or annual goal, you'll get certain incentives, whether it's a paid amount or reduction in all of the sales that you had previously. So that's something that is usually maintained in a separate system, or sometimes it's just managed on an Excel spreadsheet. So that's something the auditor should look for because those could be prone to error, especially when they are on someone's Excel spreadsheet. One of the issues that an auditor has is the complexity of the systems that they're in. So, as much as QuickBooks is a great system for doing business accounting and whatnot, it might not be as complex as some businesses require. So, they'll use these other subsidiary systems that will do all that major uh, uh, crunching in that particular area, and then it'll get imported or entered into QuickBooks. So examples of that are you may not use the QuickBooks payroll function, you may use paychecks, and so you'll get those paychecks reports. You may manually enter them, or you may use Paychecks' feature to automate and upload those data files into QuickBooks. But now, related to the revenue cycle, you might have a complex inventory with multiple pricing and differing costing methods that you want to keep track of. So they'll fall outside the realm of what QuickBooks can do. So you might invest in another inventory system, then you'll use those reports, again, whether it automatically feeds into QuickBooks or it's something where you've got to manually enter it monthly, quarterly, whatever you do your inventory on. That's something that you have to be aware of. Same with your point of sale system, like our cash registers. They may run standalone, and you might have several registers that are all talking to each other, but they're not talking to QuickBooks through an automated feed. So you got to manually enter those. Could be a daily situation, could be a monthly situation, or you may have spent the time to put on a feeding system that will then take that data from, in this example, Mike Gross's sales computer and put it into QuickBooks so you don't have to manually do those entries. Now, the other side of that too is you've got users who are pulling information out of QuickBooks, but a lot of times that information isn't the way they want to see it. So we'll put it into Excel, do our manipulations or moving around or get it in the way the users want to see it, and before we send it off to the users. Again, these are auditor areas that we really need to focus on. How well they've handled those Excel. Do they have tight controls on it? Is it really reporting the actual information that's coming out of QuickBooks? Because there could be some manipulation there that is used by managers or whatnot to let users think they're doing better or misinterpret the information that's been exported out of QuickBooks into Excel, and then misguide someone on maybe their sales commissions or meeting management goals or things like that. All of this is a big concern for an auditor, and that's why we step back when we do our original assessment and see what systems we've got out there so that we understand how it relates to the cycle that we're auditing.